My name is Augie. I'm an investor with CMT Digital. CMT is a 28-year-old trading and investment firm based out of the US. We've been investing in the space for about 8 years. We've raised 3 funds, and we've partnered with over 100 companies in the space, including EtherFi, Athena, Axie Infinity, Coinbase, Consensus, and many others. And it is my pleasure to be moderating this panel alongside our esteemed panelists, Miguel from Arkham, Key from CryptoQuant, and Alan for Dune. Thank you guys so much for joining us. I guess to start, I think it would be quite helpful if you could each take 2 minutes and maybe share a little bit more about your backgrounds and your respective companies. Miguel, you want to kick us off?
Sure, yeah. So my name is Miguel Morel. I'm the founder and CEO of Arkham Intelligence. Arkham is a blockchain analytics platform focused on labeling as many different wallets as we possibly can for the cryptocurrency ecosystem. The overwhelming majority of our customers are retail traders, followed by institutional traders who are looking to do one of 2 things. Number one, attempt to find alpha in the market by discovering new wallets and patterns of wallets that are owned by the same type of entity, and then analyzing their behavior in order to then take that in aggregate and try to make a collective approach of what the supply and demand market dynamics are in the current ecosystem, and furthermore determine if the price is going to go up or down, and that's what they trade on. And then secondly, an attempt to manage their risk, right? So analyzing portfolios, analyzing balance sheets of different companies that they're actually custodying with, for example, in order to try to protect themselves from all the sort of risks that exist in the crypto ecosystem.
Hi, my name is Key, CEO and founder of CryptoQuant. We're a data provider. We provide analytics platform for institutional investors for quantitative trading. So CME Group, WorkQuant, and all these other major quantitative trading firm are our clients. And also we have a platform for retail investors. It's for tracking smart money and monitoring third-party risk, which is mostly by labeling, just like Arkham. But what's the difference from other data providers is that we aggregate all these on-chain wallets into one single, very intuitive matrix for traders. So we're building traders community who wants to derive trading insights out of the on-chain data.
Cool. Yeah, hi everyone, I'm Alan. I'm at Dune Analytics. We're a community data platform, a data analytics platform, and it's basically a place where anyone can build queries and dashboards comparing different blockchains, different protocols, and then build on top of this via our API. And yeah, we work with most of the biggest blockchains, and we provide data for crypto companies, hedge funds, protocols, you name it.
Fantastic. No, thank you. And I'm super excited for this panel. I think you guys should be too. And really the reason for that is, if you think about it, blockchains fundamentally are a database and data structure innovation. And so the topics that we'll delve in today, some of the questions that we'll ask will be where we're seeing the most innovation at that data structure layer, whether it's things like data privacy, the impact of AI on data, data ownership, data ingestion. So with that, I think let's get into it, maybe starting with data privacy, right? There is, at least today, a fundamental trade-off between uncovering or surfacing data and maintaining data privacy. I think on the trading side, it's quite apparent, right? Where if I'm doing some activity on chain, you as the third-party observer would see exactly what trades or pools that I participated in, which isn't necessarily ideal, right? And so there are areas looking to address this space, categories like FHE, where you can compute over encrypted data, mixers, obviously, where you can obfuscate flow. But I guess the question for our panelists really is, this trade-off that I've been describing, is this a given in blockchain, something that we need to accept? Or do you see a world where both of these goals are achievable together?
I can go first. We tend to get this question a lot. So, you know, the interesting thing is I think that fundamentally blockchains do in fact have this, this paradox where they are both, you know, simultaneously sort of meant to be very transparent, immutable, and very auditable. But at the same time, they also have this sort of inherent characteristic of pseudonymity, right? And so when you build a piece of technology that is both meant to be incredibly transparent and auditable, but at the same time, by default, you know, gives the user a sense of kind of a sense of privacy via pseudonymity, I think you basically then end up attracting the kinds of people and the kinds of users who like both. You end up getting a huge camp of users and of people who are like, I love crypto because it's super transparent and super auditable. We should be using blockchains in order to make sure that, you know, this data is legitimate, that people cannot mess with it, and in order to provide a certain amount of data security by the fact that, you know, it's so difficult to, for example, go back and, you know, alter the Bitcoin blockchain, for example. That data is there, it's there permanently. You know, once the block has been mined, you know, it's nearly impossible to go back and edit without reaching consensus. And so, you know, but on the other side, you then end up getting all of the sort of privacy type folks who want to use the kinds of use cases and applications that, you know, are yielded from having a kind of technology where somebody can transact in a financial matter, you know, with pseudonymity, right? And so I think the answer to this is that both of them exist in parallel. It's a little bit paradoxical, but to answer your question, I do think that they will continue to exist in a very similar kind of way for the foreseeable future. And so my vision for the way, you know, cryptocurrency is going to go is that it'll be very similar to kind of like the broader internet, right? The broader internet is very, you know, transparent. People, you know, use their real name accounts on Instagram or Facebook or Twitter or, you know, whatever. Those who won't choose to be pseudonymous can do that, right? There are plenty of sort of anon accounts and anonymous kinds of tools like Tor and VPN and other sorts of services that people can kind of opt into. And I think that cryptocurrency will go the same way. I don't think that privacy tools or ways of people maintaining their privacy will disappear. I think people will continue building that kind of technology. I think those who are interested in using it will continue being able to use it. It's not going to go away permanently. And I think that that's also how it should be. If you want to opt for a more kind of private financial setup, you should be able to do that, right? And people do that within the cryptocurrency industry. However, I do think that that will continue to exist in parallel with the other fundamental characteristic of blockchains, which is transparency and auditability.
I think the market will decide the technology adoption. So there's a Monero, you know, Zcash, all these ZK fully, you know, it guarantees privacy for your transactions. But, you know, some people use it, some people don't. So I think market demand will tell us what to build. For example, if CBDC and stablecoins, it gets adopted, you purchase orange juice in the convenience store, right? And you can basically aggregate demands for the orange juice around the world in every 15 seconds by block time, right? So if you think about it, once we need to calculate oranges supply and demand, to calculate interest rates for the world or, you know, the nationwide matrix, people will put some data there, and people will exclude some privacy data. It all comes from the demand, I think. Yeah, that's it.
Yeah, I agree. Like I think it's nice that there's different alternatives, but I agree with Miguel's point about like there's a lot of transparency and auditability of this. So I think what's cool about this is that you can actually you can see what data you have left traces of on the blockchain, and then you can kind of choose if this is something you want to continue doing or not. So you can choose to either keep participating in that blockchain and leave that data behind, or you can not do it, or move to something that's more kind of privacy focused with all the trade-offs that entails. And I think this is a big shift from like my data on Facebook or Instagram or Twitter or whatever. There's GDPR, but I don't really know what data they have on me and how they're using it. So I think that's kind of the most interesting part about this, that I could see potentially what they have on me, and then I can either not participate or to participate.
Yeah, I agree with Key. I think to add to that point, it definitely is true that I like calling it, the market's revealed preference, right? There are plenty of people who make these claims online about, the people want X or the people want Y. And really what they're trying to say is, I think this is a good idea, and I think this is what the industry should look like. It actually has nothing to do with what everybody else thinks. And I think that really shines through in these sorts of things. Like, if people want to use privacy coins, privacy protocols, privacy tools, et cetera, they will go and do that, and that will show in the market. Sure. The reality is that, things that are, ultra transparent are just way more successful. That's just the reality, right? If you look at the tools, you look at the coins, et cetera, all of the things that are, the largest things in the market, most of them have absolutely nothing to do with privacy, right? And that's just the market's preference, right? And that's not even talking my own book. That's not talking, our preference or anything. I think there are other things that, for example, I don't agree with that, have become ultra successful. Like, the people want meme coins. It's just like the truth. Like, these things have insane market caps. They grow like crazy, and the reality is that people care more about investing in like cat memes than they care about privacy, because those things have way more of a higher market cap and more trading volume, right? And so I think the market, for better or for worse, does in fact show its preferences and what it thinks is good ideas or useful or important or whatever, compared to other sorts of things. And the transparency camp right now is winning.
Makes sense. Okay. I want to maybe switch gears a little bit and unpack one of the comments that Alan made, because I think it dovetails very nicely into another topic that we should discuss, which is data ownership, right? I think there are companies that we've seen in the space working towards giving individuals ownership of their data and the economics associated with it, right? Even within our own portfolio, we've invested in Cookie3 and Snickerdoodle, which are, at a high level, working towards this objective, right? And, in my opinion, it's a worthy objective, but sometimes feels a little bit far out. And so the question I have for you all is, where do you think we are in the process of providing individuals with ownership of their data? And frankly, how realistic is it given the backdrop of Web 2 business models today?
Tough questions. But I specifically remember when Arkham launched, some people talking about their platform product is really great, but people worried about doxing people. Actually, my address is also doxed on Arkham as well. At first, I feel like, oh, my privacy got breached. I felt bad. But at the same time, just like market demand, okay, I'm gonna split my addresses for privacy, but also for the, disclose to the public. And Arkham did really good job in terms of the transparency. So when someone, some insider trading or some proof of reserve, and these are really important and advanced the industry. And once we do like these type of experiments in on-chain data, market will decide what to do and don't, and eventually we basically educate the importance of the privacy for each individual. For now, I think most of people, they don't understand why privacy is important, why Bitcoiners and other crypto people care privacy. But once they feel just like in my case, they will care the privacy. And on-chain data provider and platforms, our role is very important in that perspective.
I think one interesting thing here is like, so my individual data might not be very interesting to a company, but if we're like 1,000, 10,000 people organized somehow, and we together kind of want to sell our data, and we opt into that, I think that can be an interesting way of doing this. And I don't know, maybe it could be organized via some DAO structure or something like that, where you have this kind of almost like a data union or something, where you explicitly sell your data to someone, but you know who, and you get compensated for it as well. Kind of flipping the Web 2 world where they are just selling your data and profiting from it, but you don't really benefit from it. So yeah, I think that can be an interesting thing to explore in the future.
Yeah, I think from our perspective, we've taken a really interesting approach, which I think has caught a number of people off guard, which is that in building our platform and in releasing all of this data, we've at all points in time tried to make the data as accessible as possible, right? In the beginning of my business, I had to make a decision. Okay, are we going to be kind of like a SaaS kind of company? Are we going to be like a B2B institutional kind of company, or are we going to do a kind of direct consumer application where we try to get as many users as possible, right? And my philosophy as an entrepreneur has always been that the value of your company, roughly, obviously there's speculation and other sort of market dynamics at play, but on a very high level, the value of your company is directly in proportion to the amount of value that you're producing for the world and for your user base and for your customers, right? If you look at all of the largest companies in the world, they have a dramatically outsized impact on number of people, in terms of value that they're producing for people, and what they're bringing to the table. So I think in terms of Arkham, we've been pushing that as much as we possibly can in trying to deliver value to the cryptocurrency ecosystem by building some of the best tools, by providing some of the best data, and by making it as accessible as possible for everyone, right? Many other companies don't take that approach, right? There are plenty of companies that do data mining and data analysis, and then they're just sold to a small kind of cabal of institutions or government regulators or law enforcement or something like this. And I think that there are now more blockchain analytics companies trying to break out of that mold and not just trying to sell to the government or something, but rather actually providing this transparency and auditability to the community in order for them to try to keep themselves safe. And I think that that's been sort of our part in at least attempting to make, for example, people aware of the sort of information and data that already exists about them on the internet, that is most likely already being used by other kinds of institutions for more private purposes, now in a kind of public manner. And you can take further steps in order to, for example, if you're interested in obfuscating or protecting your future wallets, now you know better ways of being able to do that. So that's my kind of general read. In terms of whether or not people will be able to own their data in the future, I think it's going to be very difficult. If you're using a platform that a company has built, that they're trying to extract value out of, and they think that they can sell it in private or something like this, it's very, very difficult to try to retain, ownership or financial royalties or something of your own kind of information, because it goes against their incentives. We have no reason to kind of sell this sort of data in public or in private, because it's all public anyway, right? Like anybody can just go on Arkham, and like everything that you see there, that's what every single one of the users gets. That's what we see internally, and everybody's getting it for free, right? There's no back channel. There's no point, right? And so I think the more companies can kind of move in that direction, I think the better and healthier the data sort of ecosystem is going to be.
Makes sense. Great. Let's move on to another topic, guys, which is, it would not be a 2024 panel without bringing up AI in some form or fashion. And maybe the broad strokes of the question is, we're obviously in a position today where AI is making leaps and bounds forward at a very rapid pace. We ourselves have seen many companies that are attempting to productize AI across the value chain of blockchain. We invested, for example, in a company called Hypernative. They do, it's basically an advanced AI monitoring solution for detecting vulnerabilities in smart contract code. But there are many other use cases. And so I'm curious for you guys, how are you currently utilizing AI in your businesses? And how do you see it impacting your longer-term product roadmap, if at all?
For now, we've been using AI to identifying addresses. So if you build a model that determines whether this is exchange or not, its accuracy is around 85% ish. So that's the one thing. And secondly, I think AI really helps us to interpret smart contracts. So whenever we build the abstraction tables for certain smart contracts, we ask AI to decode all these data. And lastly, I guess on-chain data is for transparency, but ordinary people, they don't understand how utilize on-chain data and how interpret those data to get the knowledge they wanna they're curious about. So we're building analyst community, and based on these on-chain analyst community, their contents, I guess we can train some kind of AI analysts, but its accuracy is not like really helpful for now. So I guess it will take 3 to 5 years to make it actually helpful. For now, it's like just for checking whether this is fact or not. But it's hard to make those AI models to become more financial advisor.
So we recently released a product that's called Dune AI. It's basically, so our main interface has always been writing SQL queries and getting data that way. So with Dune AI, you can basically chat with our data. So you can just type like what was the volume of DEX trading in the last 24 hours or a week. So I think that's kind of a cool first step we've taken in making our using AI to make the UX better. And our mission is to make crypto data accessible, and I think that's kind of I don't think everyone will be able to write SQL queries, but almost everyone will be able to write sentences to get data. And then I think more long term, I think AI can help us with discoverability as well. We have over 1 million tables that you could query, so just like doing normal search can sometimes be a bit challenging. And then I think another thing long term, we recently partnered with Snowflake to make our data available on Snowflake. So I think other people using blockchain data to build models, I think it's also still kind of early and untapped.
Yeah, the majority of our usage of anything kind of AI, data science, machine learning related has been with the labeling. With our platform, for example, we have millions of entities and over 1 billion labels that we need to manage. That cannot be done manually, right? You need some automated assistance to be able to do that. And so actually, ever since the beginning of our company, we have been using different sorts of machine learning tools and AI in order to do, for example, automatic categorization of wallets, on the most kind of basic level. Certain wallets fit particular patterns, right? Like deposit wallets will always later transfer to, they'll receive money from like a gas deployer and then they'll always transfer to a hot wallet. And so these are the sort of automated kinds of things where you can do things such as deposit wallet detection, and then if you're able to detect that something's a deposit wallet, but the hot wallet is unlabeled, then maybe you can then use that to make a prediction about what exchange it belongs to, right? Based on the pattern of the users or the wallet surrounding it or the other hot wallets that it's interacted with, et cetera. And so if a human had to go and do that across every single wallet on chain, it would take an unbelievable amount of time, right? And so this is one of the use cases for us of different sort of machine learning tools and artificial intelligence. We also have a front end kind of more user-facing application for it as well, which is called the Arkham Oracle, where people can do similar things where you can type basic queries in about things that you're interested in if you have difficulty searching through our platform for something in particular that you're looking for, which has the ability to answer questions and respond like this. But I agree with Key that we're still a pretty long ways out before these things can start giving like financial advice or something like this. I think it'll be a while.
Not financial advice.
Yeah.
Got
Yeah.
it. Okay. Cool. Let's move forward, guys, and I'd love to talk a little bit about data ingestion. Right? I think a lot of you guys obviously do a lot of work when it comes to on-chain data, organizing, querying, labeling things that have come from, in effect, the core consensus. I think another interesting problem in data is how do we ingest real-world data from off-chain to on-chain? Because I think that presents two very unique problems that need to be solved. One is ensuring the validity of that data through things like, let's say, ZK-ML. And the other is, how do we ensure the trustlessness of our data oracles through, for example, eigenlayer AVSs? And so I'm curious to get your guys' view on this topic. How do you see the ingestion of real-world data evolving? And how do we solve these two problems? How do we verify data being submitted on-chain in a trustless manner?
That is a really tough question. I think that this is something that we often have to solve for because, yes, there are occasions where you use exclusively on-chain available information in order to, for example, find the label of a wallet. But oftentimes at Arkham, we also have to use off-chain information in order to do that, right? Going through things like court filings, going through Twitter or other sorts of services, and so that is a situation where being able to do that off-chain data sourcing in an automated way where we can verify the validity of the information, that's a problem that we still need to solve for, right? That is a problem where you still need to hire people to sift through the data, analyze it themselves, verify it themselves, et cetera. It's not something that is yet automated or done by the community or done by a decentralized oracle or something like this, though it is in our plans, right? And it is something that we have, publicly stated that we are interested in doing because it would obviously be a massive benefit to our business and to our users, right, and to the ecosystem as a whole. But I think it's incredibly difficult. And my response to that is, that problem of sort of in a decentralized way being able to bring off-chain information because of the fact that you need to verify it and validate that the information is correct. This is something that is still needed to be done by a human and cannot yet be done in a decentralized way, in a way that's not, for example, susceptible to fraud or attacks. Right? Like some people say, well, you can put the information up online and then have people vote on it. But then how do you not get manipulation, for example, right? And so there's a lot of these sort of edge cases and other kinds of problems that mean that it's incredibly difficult to do this in a decentralized manner.
I think it's almost impossible to make trustless for off-chain data. So we might need some kind of semi-trustless, not trustless, but decentralized way. So in order to achieve this level, I think the future should be we need to make blockchain get adopted. For example, the way that all the alternative data providers gather the data for the consumer, index or other indexes. They just call to, for example, Chicken Factory, and then ask about, hey, how many eggs hatched today? I mean, get today, and then they just put these numbers into Excel file, and they gather the data. And it's lagging, and it's not like very scientific, right? So in order to get those off-chain data, for example, once stablecoins, CBDC, Bitcoins, these P2P payments are, pretty widely get adopted. They can do some kind of smart contracts and then put the numbers correctly. If they don't put numbers not correctly, and it just like got founded, we can just slash them based on the smart contracts, for example. So I really believe the future of on-chain data will be like change the monetary policy around the world. And off-chain data can be trustless if we get them into a smart contract and then build some kind of slashing policy.
Yeah, I think I agree. This is not a easy problem. It's a difficult problem to solve. I think in general, to be able to trust data. I think in our case, we rely a lot on our community to to build models and to for example submit labels and stuff. And I think that's one way of trying to validate data. Anyone can make a mistake, but then anyone else could also say that the other person made a mistake. So you have this sort of very rough social consensus on that this is correct or not. And I think transparency is important here. It's like, okay, if you have any data, where did it come from, and why did they publish it at the time that they did, and so on. And I think in that way, you slowly start building trust, and then you can choose if you want to trust a certain provider or not. So yeah, I don't think it's an easy problem, but I think there's ways to slowly get there. And I think, given that it's permissionless as well, to sort of publish this data on chain, if you don't like what Chainlink is doing or whatever, you can just publish your own data somehow and start building up something that way, which I think is also quite interesting.
Makes sense. Great. We're just coming up on time here, guys, so maybe one final topic that we can discuss is data in the context of this multi-chain world that we live in, right? And I think the backdrop here for the audience is, I think it's fair to say that historically, EVM has been the de facto standard when it comes to data. But with the rise of Solana and others, data standards may need to change. And frankly, for an application layer developer, new problems arise where different chains means siloed data, means different data standards, means event logs being emitted from these different chains. They may not even be called event logs, whatever the nomenclature is for respective chains. The point is, the data problem, data structuring problem becomes that much more complex. And so I'm curious to get your guys' view. With the rise of Solana and others, how do you see data standards changing? And I guess for a dApp developer building multi-chain, how do they maintain a holistic overview of their data across different chain environments?
Yeah, I think Solana has really shown that you can there's an alternative to the EVM that people really care about. And I think this kind of creates the potential for more of these alternatives, like Solanas, basically, that are not, that work in completely different ways and have different data models. And obviously this makes our lives as data, that are doing data ingestion much harder. But I think one thing that we can also try to solve is to try to create a kind of a unified model for what is an event log, or for example, what is a trade on a DEX? How do we define that cross chains? And I think there's many of these cases where I think it's our job as analytics platforms to try to make sense of all of this and create some sort of standards cross-chain, so that you can actually compare things between all of the platforms.
I think it's a great question. Whenever we expand our data to other chains or new altcoins, decoding smart contracts, it sucks. I mean, it's too many, and there's no standards. Hey, you're a DEX, and how we can calculate your DEX revenue, right? And the way that to calculate their DEX revenue is different from others. Every DEX have different protocols. So I think some leading on-chain data provider, maybe Dune, should do some kind of build some kind of on-chain data alliance, and then say, hey, this is just like ERC20. Hey, this is standard to calculate DEX protocol revenue, and then data providers like us, we can calculate more easily those protocol revenue, because the way to calculate these aggregated metrics differ from data providers. So some data providers say, here their protocol revenue is 3 billion, but others say it's 2 billion. This discrepancy comes from just standard, how to calculate, aggregate the data out of the smart contracts. So we really need, I think it's the right timing to do some kind of like building standards for the industry.
Yeah, I think for us, we started with Ethereum, and we initially only supported Ethereum in the beginning, and then over time we have added significantly more EVM and non-EVM chains as well. Broadly speaking, what we've tried to do is analyze where the majority of the real on-chain activity and volumes are happening, and then use that as a kind of guiding star for which chains we are going to end up supporting next, because as Key mentioned, like, it's a huge pain to actually add support, and there's ongoing costs, and there's all of this maintenance that needs to do, and all of these different chains end up getting upgraded and et cetera. But the reality is, when I first started the company, Ethereum was, kind of like one of the only shows in town in terms of where a bunch of the activity was happening, obviously besides Bitcoin. And now that has grown, and there are other chains that have their own, massive communities that yell at us on Twitter and stuff in order to add their chain for them to do analysis, right? And so, it's our job to try to provide this information to the largest amount of users that we possibly can, right? And so, from my perspective, I do continue that. I do believe that crypto will continue to be multi-chain, and that more and more of these ecosystems will pop up. I'm not sure that we'll ever get people to agree on following a standard process, and likely that is that's a stone that us data providers will have to, keep hauling around. But I do think that, the more of these that exist, the better, the more sort of anti-fragile our ecosystem becomes, and it's just up to us to build as good of a tool as we possibly can.
Makes sense.
Yeah.
Well, with that, guys, we're at time. Thank you so much to each of you for joining us. And for those in the audience, please join me in a big round of applause for our panelists.
Yeah, thank you.